Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update, and you want to strap yourselves in for this one. We've got a lot to talk about. We're going to be talking about everything from oil to Liz Truss, the new UK Prime Minister, to Binance getting rid of USDC. And then I'm going to be diving into Bitcoin, sharing with you a head and shoulders pattern that we'll be mentioning that may be setting up, taking Bitcoin down to 15 or below 15k. I think Bitcoin will get there whether this pattern actually plays out or doesn't. But essentially, you do have a head and shoulders forming on the smaller time frame. So we're going to get into that. Stay tuned for that. We will be talking about that towards the end of the video. We're going to kick things off with some oil news. This is from OPEC, one of the largest suppliers of oil. OPEC Plus agrees to cut oil supply is a political snub to Biden and the European Union consultancy. So essentially, there's been a concerted effort. It's one reason we saw lower CPI print. Was actually massively down to the fact that the US government were dumping oil onto the markets. Let's take a look at the correlation between oil and Bitcoin, because all of this is relevant. You're going, All in Crypto, why are you talking about this as a crypto channel? Well, this is Bitcoin going up, this is oil going down. Correlation is apparent. OPEC have now said, actually, I know what game you're playing here. What we're going to do is essentially reduce the supply to bring the price back up. I think inflation is going to stay persistent. I think that hurts consumers and takes cash out of their pockets. And I also think what the Fed is going to do and is going to continue to do is also going to be very damaging. We still have lower prices for this market. It's that simple. We've been talking about global liquidity. We've talked about the M1 supply. Talking about the M1 supply, that's going to be something that we pivot into. You know, markets are driven on liquidity. Liquidity being cash. This week alone, you've got the Bank of Canada, you've got the Reserve Bank of Australia, and you've got the European Bank, the ECB, all coming out and upping interest rates. So, essentially, I think, or I know, that's going to take more liquidity from markets. Not just the US that are playing this game and doing this, it's across the board. Inflation's higher in other countries. You know, you've got to look at who's going to be buying crypto in this kind of an environment. Who's going to be buying stocks? More likely, people are going to be selling to have to pay off other financial obligations or sort of utility bills. That brings me on to my next thing, talking about Liz Truss. And we're going to get straight into it because this was shared from Dylan Leclerc. Incoming UK leader Liz Truss is earmarking $130 billion pounds, I should say, to keep household annual energy bills below $2,000. 5% of GDP to subsidise household energy bills, stoking the flame to keep energy price bid further, driving up costs for the business sector. So the issue with energy largely has a lot to do with supply. Okay, there is also the just like we saw markets rise with this huge printathon of money. You know, you can see this is the orange line that we have in terms of the US money supply. You can actually also see that you know, that would have gone into commodities as well. Commodities is typically one of the latter things to actually receive inflation. You've got your more liquid assets like crypto, like stocks, then of course houses, so on and so forth. But depending on how they do this, do we see an increase in the money supply to combat this crisis? And it is a crisis. I think it's going to be what the next yield curve inversion in hindsight is going to be called, that the energy crisis, the European energy crisis, that caused everything to, you know, that was the reason we went into a recession, even though we're not there yet. It's still coming down the line. How is she going to do this? Is she going to do this via crediting energy companies, or is she going to do this via doing a sort of furlough system, a give out of money? That may lead me to have somewhat of a more bullish outlook on markets, because then, just like March 2020 onwards, people have got cash that they're being subsidized, whether they need it or they don't. A lot of that is going to find its way into markets, undoubtedly, if people don't actually need it to pay off the debts. Or the energy bills that they have. So this is going to be super interesting. Here's another tweet talking about it. Energy margin calls seen totaling at least $1.5 trillion. This is from BBG. Europe's energy trading risk grinding to a halt unless government extend liquidity to cover margin calls of at least $1.5 trillion, according to the Norway energy company Equinor ASA. This is my concern, because I really think that we've got two sides. If they have to start imprinting and adding liquidity, okay, then we can get bullish on markets again, because we're going to see the money supply go up, and undoubtedly that's going to find its way into risk markets. But if they don't, when they're talking about grinding to halt, so back in 2019, when we had the yield curve inversion, 6 months later we had the event of March 2020, They had to essentially undo and go back to stimulating the economy again and reduce restrictive monetary policy in the US simply because liquidity got dried up in terms of the repo market in the US. Repo market just basically means how the euro sort of interbank system lends to one another. That basically stopped. So they needed liquidity to further and keep that kind of system, Ponzi scheme, whatever you want to call it, afloat. I'm not calling it a Ponzi scheme, just a word I'm throwing out there. Is this energy crisis that we're moving into going to cause them to turn the printers back on? I think potentially it will. I think we may have found what's going to cause or issue in maybe another bull market, potentially. But I think there's pain that has to happen in order for them to do that, which means I see lower prices across the board for the cryptocurrency market. You guys know that we're not investors at these prices, and we're waiting for more pain to come, which I think is somewhat inevitable at this point, before we decide to get back in and start investing in such a risky asset class. You know, we all believe in the long-term visions of the crypto space. Nobody's more bullish than I am. I do really believe this is a technological revolution. However, I think there's pain to come in terms of markets. Markets are driven on liquidity, buying and selling. I think you're going to have more sellers than buyers for this next time period. Certainly if this energy crisis worsens, they don't do anything about it. Even if they do something about it, that's going to keep inflation persistently higher. The Fed has said very strongly, we are not going to, and our main mandate is to take down inflation. We're going to do that through killing demand. All you need to know, basically. They're going to kill demand to bring it in line with supply. They don't just specifically target the energy sector. They're targeting demand across the board. Retail, institutional, demand through liquidity. So it's very, very interesting. It's a game that we're trying to play. This is an out of this world article. Hot meals or warm classrooms. UK schools face difficult choices as energy crisis bites. It's not just schools. It's everything that's facing this. And this, when people don't have the money to choose between keeping the classroom warm or hot meals, where's the money to buy crypto? Where's the money to buy the stock market? Where's the money to pump all these assets up to new prices? A little bit of other news I want to talk about is Binance. No plans to auto-convert Tether, though that may change. The crypto exchange responded to the questions from Cointelegraph after announcing it would cease trading support for USDC and 2 other stablecoins this month. So Binance are delisting USDC. Why? And this is something that I need to get to the bottom of. Doesn't make a lot of sense to me. It's not. I don't know whether they're doing this to bolster their own stablecoin or bolster USDT. I don't know why they're doing this, but this is significant and has me sort of thinking about a whole list of things. But maybe it's just a boost to their BUSD because they have their own stablecoin, which of course is facilitated by the Binance Smart Chain, BNB. Let's get into some technicals, guys. So where are we at? Well, we're not investing here. We need to see volatility really reduce, and we need to see this. We did say there is a potential bottoming structure here. If you fire back up to this 25k neckline support and then continue, then you could be looking at a broader head and shoulders, a reverse one. Let's talk about the here and now. Let's talk about this head and shoulders that I'm looking at. I think this is very probable in terms of playing out. Let's get rid of the volume by price. I think likely you're going to come back to 21k-ish before we get that next downside. That's what I'm going to be looking for in terms of shorts. For me, this looks like a head and shoulders. Very much, we'll get rid of this box as well. Very much looks like a head and shoulders. If this does play out as a head and shoulders, by the way, get ready for 14,996 roughly dollars Bitcoin. That's not going to be exact. But might be close to it. Let's pull our head and shoulders tool up. I think this is what you've got here. This is a complex head. And we're currently in your right shoulder. How do we get invalidated? Well, if you shoot up here and you take out these highs. We couldn't really call that a right shoulder. But my suspicion is we can pull volume by price back up. My suspicion is that you're likely to come, if you break this, you're likely to come back to the upside. This is where I think potentially you're going, back into this region here. It doesn't have to happen like this. This could be the right shoulder, by the way. That would be very bearish. And this already has the hallmarkings of what we want to see for a head and shoulders. Grind up, Very sharp return to the neckline and weakness on the right shoulder. We've already got the whole markings of this potentially playing out. Again, the target that you have on the head and shoulders, taking the neckline to the high, would bring you down just sub of $15,000 for Bitcoin. Are you prepared for that? Well, if you've been watching this channel and you've been a regular subscriber and viewer, you will be. But this is a scenario. Again, this could be invalidated. You could have a rally up to here, do something like that, and then see that downside coming. And you're going to interact with these levels, in my opinion. So 1750. And then 16,000, and then probably come down and actually complete and hit this target. Head and shoulders patterns are a lot more potent than many others out there. This could just be it. You could get one final stab, and then you see this downside. A number of ways this can play out, but September doesn't seem particularly bullish for me. I can see room for more upside based on the fact that the dollar has absolutely killed it. I would expect this to take somewhat of a break. I mean, look at this wick on the 4-hourly. Jeez. Lots of people talking about longing euros right now as well. But then again, it could just rip up. I think dollar's definitely going back to 110. We had targets of 1.8 way before it was even over 100 for the dollar. And we do see that going higher eventually. But if it has a bit of a rest period, doesn't have to, then unfortunately you're going to see, or fortunately, if you're long, you're going to see Bitcoin see a little bit more relief. Eventually this gets squashed and you do come to the downside. So pay this in mind, this potential head and shoulders pattern that we have forming. It's not the prettiest of head and shoulders. Other people say, oh, you need 2 peaks because you had 2 peaks this side. I don't really subscribe to that. But this is your left shoulder. This is your complex head. This potentially is your right shoulder, however that right shoulder may look. Important thing is that it doesn't show more strength here to the upside. So if you did something like that, you know, this would be invalidated basically. And certainly if you take the head high out, then you're definitely invalidating it. But whilst we're seeing this weakness, I think this head and shoulders is very much still in play. And that is all I've got for you in this video, guys. If you enjoyed this content, a like is always appreciated. So is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful day, ladies and gentlemen. See you in the next one.